Okay, let's take a look at how the markets are reacting today to that March jobs report, a potential trade war with China, the Fed chair, Jerome Powell's remarks about the economy in just the last few minutes. And let me tell you, the market is off now, the Dow off right around 650 points. Joining me from the floor of the NYSE, TJM Investments trader Tim Anderson. Tim, what do you hear down there on a day like today? Because it's got a feeling like it's just heading lower and lower and lower.
Well, it's certainly never a dull moment, Ashley.
Yeah.
You know, we've got the opportunity here to have a 90% down volume day, and also hold the lows from Monday's close, which was about 2580, I believe, on the S&P. On the S&P. That might actually be a positive to set us up for next week. Now, there's a tremendous amount of moving parts in the market. The trade banter or negotiation, if you prefer to call it that. The jobs number this morning was clearly a little disappointing, but I think there was a little bit of give back from the big number we had the previous month. And the market might have had a little bit of a hiccup an hour ago to some of Chairman Powell's comments, although I think the markets may be acting a little spoiled in that regard. But he mentioned we're still on track for 4 rate hikes this year. Just after the jobs report this morning,
right,
the Fed fund futures were pricing in only a 25% probability of a 4th rate hike. But the market has to realize here that the Fed's not going to change its projection based on one piece of economic data or on some banter and negotiations going on at a very high level on trade.
So, Tim, let me ask you this. This is a market that's kind of trading on headlines or on tweets, whatever you want to call it. Can we improve or at least calm the nerves a little bit once we get into the earnings season, which is just around the corner for the first quarter? If those numbers are good and the corporate outlook is rosy, will that help calm the nerves?
Well, I certainly think if we get some real news for the market to react to, some hard data, and corporate earnings is certainly qualify as that, and then we get a little bit further into the month and we start to get the first look at Q1 GDP, which is probably going to come in at twice what Q1 GDP came in at a year ago. That'll be very positive, and that'll give the market some support. There's no doubt that the economy is still there's still good growth to the economy, and I doubt that we've hit peak earnings yet. But right now, this is what we've seen today is that there's a tremendous amount of uncertainty in the market.
Oh, yes.
And the market has a more difficult time dealing with uncertainty sometimes than it does bad news.
That's absolutely true. Tim Anderson. Tim, thank you so much from the floor of the New York Stock Exchange.